Hello everyone and welcome to the weekly video technical update. Guys, was a strong move this last week for the reservation, and we have gone very deep into the charge over the weekend update, and we're gonna draw that. We're drawing after the weekend update. We're drawing the same conclusion that we have over the last, 24, 48 hours of trading over the last week, that in general this can be the case. Let me put in the right words. I really do believe that the recovery in the dollar is corrective. Now, that doesn't mean that the recovery in the dollar cannot make a new high, because the dollar is coming from a huge low, and it can be doing that in the way of the ending diagonal or the leading diagonal. Now, not getting too deep into the weekly charts and the daily charts, that we're gonna do tomorrow on the seminar. Looking at the short-term chart, we see 7 swing from the lows that we have in October the 4th on the dollar, and from there we see 6 swings right now, but the sixth swing as a nature was corrected, so the 7th swing should happen. Now, like we have been saying all over, everything is related to the S&P, and here we have the chart of the S&P on the 60-minute chart. I don't care about the rest of the S&P movement. All we care now is this and the S&P. This is the one that is going to drive risk one way or the other, guys. Believe me when I say that. Now, like the whole world was expecting this triangle to hold right there, but DB was right. DB was right when he was mentioning that when everyone is expecting one thing to happen, never happen. And that's an absolute savvy on his part, and that's completely right. That's most of the time the way it is. Now, after seeing that the triangle didn't happen, we can label this is a mess. We can label this in different ways. I'm starting to prefer that we are either in 2 scenarios. The first one is I'm gonna present the bearish one, the one that is gonna make the dollar to make the huge move. Now, that scenario called from this being 1, and then a B wave taking place and ending pretty soon, and then it should end, I would say, around 1200 on the S&P, and then from there the S&P should bounce higher. If you guys notice, and I noticed this, I haven't noticed before, I'm taking the extensions here. The S&P is playing around the equal legs of the proposal A way here. Now, I'm expecting the next level, which is around 1200, to bounce higher. Now, how it's gonna be? Very simple. It's gonna take the phone right here of a 5-way move, and this is how you guys need to play it. This 5-way move is gonna be a drop in the dollar. Now, remember, this is the bearish of the counts. Let me remove this a little bit, this from here, and then what's gonna happen after is that the S&P is gonna go lower, and then it did a 1 and a flat 2 and lower. There is a case and there is a count that we are presenting to you guys for a few weeks already, that calling this to be an S way. If this is an S way, we're probably gonna get a more deeper C way here, and then the count is gonna be something like a B way triangle here. The same things. You got a B way triangle, and then it's gonna go deeper, and then it's gonna recover. So when you see 5 ways in the S&P coming out of the lows, so technically right here, all you have to do, guys, is this is Elliott Wave aging at its best. this in the S&P is corrective. There is nothing impulsive here. Nothing, in my view. I mean, too much choppiness. Let's say that you want to call it impulsive, which to the downside. Okay, until here you have a 1-2, a 1-2. Let's say that you want to be creative and you say 1-2 when an irregular. What you're gonna do? 1-2, 1-2. How many nests you're gonna have to the downside? I don't think so. I don't think that that's the case. Maybe I'm wrong. So all I can tell you guys is this: when the first 5 waves happen, it's gonna happen either to a new high above here, or it's gonna happen in a C wave of a flat. All you guys need to do is very easy: wait for the recovery. If the recovery improves corrective, then we're going higher to around 1350, even 1400 in the S&P. If the recovery goes impulsive to the downside, then you guys can see the S&P going to 456 points. That's all I can say, you guys. I mean, technically I know that it's very popular being bearish on the market, but this is everything but I mean, I don't want to say that I'm 100% sure, but I'm 99.9% sure that this is a corrective move, and that's gonna have a bounce to at least 1250, 1260 in the S&P. Now, another pair that is supporting that idea is copper. Copper also, from the first 3 legs, is dropping corrective, and I'm expecting copper also to trade higher and support the risk trade. Now, oil, I was looking at the 1-hour chart today, and it looks like either is 1-2, 1-2, 1 and another 2 coming in, even a big nest to the downside in oil, or oil is ABCWS Let me make the point right here that what you have from here to here is 1, 2, 3, 4, 5 swing, but there is overlapping and they don't respect the channel. So it looks like a cycle ended here. This is a bigger correction here in time. That's what we're labeling right here, but the next can be the case also. Now let's move on pretty fast to the individual pairs. Let's start with the US dollar index. On the US dollar index, this is on the 1 hour. We are favoring discount all around the market when the new high in the dollar should happen. It looks corrective to the 50% on here, and it looks like it did 5 waves from the high, from the lows, another high higher. Now I'm gonna get here into a very interesting point, at least in my view, which is the 8 hour on the US dollar index. The 8 hours, they're showing 1, 2, 3, 4, 5 swing from the lows. Remember, this one is kind of but well, it's showing 1, 2, 3, 4, 5 swing from the lows. It cannot be a leading diagonal because the third one is the shortest. But looking at this, I play a little bit with the Fibos, and remember it was around November the 10th, I believe, that this high was made in all the pairs at the 618 of the first leg, right? In my opinion, that was the end of this cycle here on the US dollar. And then we did 3 waves back last Sunday. It was not to the 50, it was very deep, but it was not very deep, but it was very deep compared to this cycle. It almost retrace the whole cycle. I'm getting to the point that I think that this is W, A, S, and we have an A and a B, and the idea that in the dollar index that we bounce from the 50% is telling me that, and seeing 5 ways out here, most likely is telling me that the dollar is going to do either this and going higher, or it's going to do a little bit more deeper correction here and going higher. I was explaining DB today why I do not believe that this is the high, and the reason being is because the only a leading diagonal can make the case. But like I say, I believe that the 5th way is bigger than the third, so it cannot be the leading diagonal. This is corrected. This is in 3-way. Can be. I don't think it's nesting to the downside, but so far it's a 3-way out of the lows. 3 ways do not create tops or bottom in Elliott wave. You need to have a 5, and because of that, I truly believe that this is what's going to happen, and that the dollar is going to look from an area, I would say, around the famous area that we have not reached, 78, 74, which is also the 76.4, as you guys see, of the previous decline. So I would say that 78, 74, 78, 80 can create the top in this leg of the dollar. Now, only a strong move and a daily closing above this trend line that I draw right here will represent a huge move in the dollar to the upside. Now, let's move on to the individual pairs for a second. On the individual pair, let's start with the euro dollar. The euro dollar, guys, same scenario than the dollar. Only a strong close below this trend line can make the case for a downtrend and a strong downtrend. The angle right here is telling me that this is either corrected or is a nest to the downside. What do we believe is that, remember, Fibos are the one that makes the counts. And then if you take a look at the Fibos right here, there are Fibos like this one. When you see that that's the 3802, that's related to this one. Now, this leg needs to relate to this one in Elliott waves. Now, it goes right here, and you're going to see that the low is around the 618. I'm assuming that the cycle ended not only here, in every single pair around the market. Now, we have this leg, it looks impulsed to the downside, and most that everything, we have at least a corrected move right here. This is a 3-way move, which makes me suspicious and believe that this is not the low yet, like we put it here. Now, we can make the case that the market is looking for around 33.44 before a real pullback to the upside. Now, we're laboring here. We hasn't changed technically that the degree of the decline. What we're changing is here and there little steps on the counts. But like I say, it's either a nest or this is an A, B, C, W, S, A, B, and C. When from there we can see that from around possible 33.40, 33.80 area, this pair can find support and go into the downside. It's getting close to these significant lows that we have right here. So it can be the case. We are presenting an extra, let me show you guys, an extra alternative in the dailies on the case of the euro. This is our preferred count, that this is a B way and it's gonna go higher. That's our preferred on the daily. But also I believe, yeah, we're presenting a bearish, an extra little bearish, a more bearish count, where he's calling from W, this being S, and we're still in the same triangle when this is S right here, and then we have to decline to the equal legs of this leg that comes around 124.29 area before any significant recovery. But again, I believe that the next low in the triangle, the same with the next high on the dollar, should be faded after seeing a fifth wave were defined. All right. Now we're gonna cover more tomorrow in the seminar, but I want to play a little bit here with the dollar CAD count, because this can be telling a lot of things. It's very clear the lack of momentum on the dollar CAD to the upside. Now the preferred count goes A, B, C, W, S, A, B, C, W, S, A, B, C, W, S, A, B, with the highest coming to around 103.80 to conclude the cycle. Now take a look at this. First leg higher, 50%. And then right here we got the equal legs on the W. And then that W is the 618 of the first leg. Very, very, very interesting there. Then we have the first three are higher to the 1.236 index FIBO there. We're getting there now. And then right here you guys can see that the S was the 618 of this move, and then right here is the 76. So it looks corrective. I can count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, and the 17th swing is going to make 18, 19 swings, I'm sorry. That's going to be corrective. So that's what I favor in the dollar CAD, a corrective move that a miss. I mean, when you see how you're going to count that in Porsche, I don't see it. And then seeing this momentum divergency is enough for me not to be bullish. I mean, I remember, let me see, the charts do not allow me to show you guys an identical move that happened in the dollar CAD in the past. So technically speaking, we are still favoring a recovery in risk, but we believe that is very possible. Most likely it's going to happen that the risk off have more into his side, but remember, most likely right there we should be chasing the last leg of that move. Okay, I'm going to come with more tomorrow on the seminar. We don't want to create too much repetition here. Thank you guys.